Hello everyone, George DeSantis here with a look at the market for the week ending January 6th, 2016. Let's begin by looking at the disclaimer or reading the disclaimer for you. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. This is not intended to be such. Let's begin by looking at some charts. The first thing we look at, and we haven't done so in a while, is the best choice chart of S&P 500. And it shows the volatility or the regression channel. At this time, we can see that the price is somewhere at about a 50% level. That's where we closed. We closed at 22.76. So we closed right here, 22.76. Now, you can see that the price tends to fluctuate between this 90 and 10% lines. And right now, it's at about a 50% line. So it has some room to go. And we'll talk about, the trends and so on later on. But I just wanted to show you this, that there is room at the top for this thing to go even higher. And in fact, to get to the top line, it would have to get to 23.11 to be exact, to get to 90%. So keep that in mind, and let's take a look at something else. And let's take a quick look at the monthly chart, although as we often discuss, it's the longer term chart, so not much changes here within a week. But we can see that the trend is still up, Kalman filter above the instantaneous trend line, and we closed higher than the week before. So this trend is still intact. The parabolic is still below the most recent bar. MACD is continuing to trend up and is now above the zero line. And Elder Force has broken this trend line here, this downtrend, and it's now trending up. So this looks still pretty bullish. Let's take a look at the weekly. And here's that weekly chart of the S&P we usually look at. It's still trending up. We still have the Kalman filter above the instantaneous trend line. And a week ago, well, not last week, but the week before that, we had a pretty bearish engulfing candle here. But last week, the bulls would have none of it, and they took the market back up. The parabolic is still below the most recent bar, and what we should take a look at too is the divergence of MACD. So as prices made a higher high here, we saw this divergence a week ago, and it's still in place. However, the bulls are hanging on here very stubbornly. So I would think that we are going to get some kind of a correction here. Not necessarily back to 2200, but somewhat between here and 2200, 2230 or 2225 or something like that. And then we continue to trend up further. But that's all conjecture. We'll wait and see what happens. All of it is conjecture, let's face it here. Percent R is still above 80%. That's still showing us a lot of momentum to this trend. RSI 12 is above the 60% line, so no doubt about the uptrend here. And MACD remains above the zero line. And even though it ticked back just a bit 2 weeks ago, last week it ticked up a little. So the lines are still, the slow average is still above the fast, the fast average is still above the slow average. So the trend is still up, and even though we have that divergence, hey, we might get a small pullback, but right now the bulls are in charge. Let's take a look at the daily chart. And here's one of the daily charts we usually look at. Daily chart of S&P 500. It is what I call the 930 chart because we have the 9 exponential moving average in red and the 30 weighted moving average in green. Since it crossed back here in November, since the 9 crossed above the 30, signaling an uptrend, this is what we have in place, and we still have that in place. Right now, the parabolic is below. It switched, even though it was above the most recent the bars here, it switched below the last 2 bars, for the daily chart. Okay, so we now have a reversal to an uptrend in terms of parabolic, as far as parabolic is concerned. So this is looking pretty bullish again, even though we had a pause here. Now the big question is, do we break above this 2280 level or so, and do we go higher, or we get a little bit more of a pullback? We'll just see what happens. RSI 12 hit the 50% line and is now above the 60% line. Williams pro buying indicator has crossed back above the zero line, and percent R is once again showing a lot of momentum to the upside above the 80% line. So the daily chart is looking bullish as well for the S&P. So the monthly chart, the weekly chart, and the daily chart are all looking bullish. The big concern I have is whether or not that MACD histogram, divergence of MACD histogram is really going to materialize in a pullback during the next week or two before we continue to go higher. But there's no doubt this is an uptrend. Here's the other daily chart of the S&P that we usually look at. In this case, we have the Kalman filter, which is the yellow line here, and the instantaneous trend line, which is the blue line. We saw here that it pulled back below, the Kalman filter crossed below for a couple of bars, and on Tuesday, later in the week, last week, it crossed back above, like on Wednesday, Thursday. So we are now in an uptrend again insofar as the Mesa system is concerned, the relationship between the instantaneous trend line and the Kalman filter. Excuse me. As far as Jerry Appel's sum of the rate of change indicator is concerned, we can see that it crossed back above the 4% line again. So we got a little bit of a whipsaw here. We wait to see what sort of direction it takes in the future, in the near future. MACD is now trending up from below the zero line, which is encouraging. And percent R, of course, we saw before, is above the 80% line. So the bullishness is still in place with the possibility of a small correction. Now the NASDAQ, the weekly chart of the NASDAQ composite is almost identical to the S&P in many ways. We had this bullish engulfing candle 2 weeks ago, and last week we have this bullish candle here. So last week we saw that the parabolic was still below the most recent bars, so there's no indication to reverse this uptrend as far as the NASDAQ is concerned. Very similar to the S&P, of course. And as far as RSI 12 is concerned, we still have RSI 12 above, hovering around the 60% line, but it's now above it. MACD, even though we still have this bearish divergence of MACD. Last week we trended up a little bit in terms of MACD. The MACD histogram got a little longer. We'll see if there's any further damage that is presaged by this divergence of MACD on the weekly chart. That's to be determined. Let's take a look at the daily chart. Here's a daily chart of the NASDAQ composite, and what we can see here is that we actually pull back. The Kalman filter pulled back below the instantaneous trend line, but has since crossed above it again. So I think this would be Wednesday. It crossed above, and we now hit the parabolic. In other words, that little yellow dot is enclosed by the body of this candle. So we call that being hit by the candle. The parabolic is being hit by this. And so we should expect the parabolic to go below the next bar if this trend continues, unless we have some major pullback. Now, at the middle of the chart here, we have Jerry Appel's sum of the rate of change indicator. A little bit of a whipsaw again, as we saw in the S&P, but it's now on a buy signal once more. The divergence of MACD here seemed to have played itself out, because now we're making high highs. And at the bottom of the chart, Elder Force Index has broken this downtrend and is trending up. So daily chart on the NASDAQ looks pretty bullish too. Let's take a look at something else. And this next chart we're looking at is from Stock Charts, and what it shows us here is the S&P on a weekly chart showing the impulse bars, red, green, and blue. And I hope you know the significance of those colors by now. Uh, that's Alex Elder's impulse indicator. And so what we had 2 weeks ago was a blue bar. So we had a bit of a pause here, and now we're back on a green bar on the weekly chart. If we look above here, we'll see that the MACD trended up last week nicely. Okay, so you have your MACD back in an uptrend here. And if we look at the bottom of the chart, Elder Force Index is above the zero line. So that confirms what we were seeing on the other charts, the super charts, that this market is in an uptrend. Now let's take a look at the daily chart and we'll see how that looks. Okay, on the daily chart last week we saw we had a red bar. We came all the way down to the 30 weighted moving average, that red line. And since then, last week, of course, we came back up, we trended back up. So we now have green bars on the daily chart as well. And likewise, we have Elder Force above the zero line here. Still possible we get a correction, but it looks more like we are in a bullish territory now. And this next chart from stockcharts.com shows us the percentage of stocks of the S&P 100 that are above the 200-day moving average. What we can see here is that the percentage of stocks were above the 50 and the 200-day moving average, okay, and it dipped slightly below the 200 and now it's back up again. So we have a nice uptrend here in terms of the percentage of stocks above their 200-day moving average. Let's take a look at something else. This last chart shows us the a 5-day average of the spread between the number of stocks making new highs and new lows. So we have the new high, new low index here. What we can see here is that we sort of dipped below the 50 and the 200-day average, and now we're back up above the 50-day average and the 200-day average. MACD of this index is continuing to trend up. So with that, I'll call it a day. I still have some stocks. I don't like to mention them here. I'll mention them in the email that I send you. And we'll talk and try and do this again, but not next week and the week after because I will be away for a couple of weeks. Have a nice weekend and see you in a couple of weeks.